Hey guys, how are we today? Now, I know I've pushed out a whole heap of videos today, but I still have more coming. This time, we're looking at the stock market. Now, we can see here the S&P 500 has, for now, invalidated the bearish divergence because as price has crept higher over the last week or so, we have actually started making higher highs on the weekly BX trender. Now, one thing that we should still be careful of is we are getting a lot more overlap in the bars now than what we were seeing previously. And if you follow Jason and Michael over in TIA Premium, you will know that more overlap in the bars usually means the market's slowing down. Duh, obvious. But it also can be a subtle sign of weakness, specifically if the stochastic RSI is maxed out, showing that we're in an overbought market. We're sitting well above market bias or fair value, bull market support, whatever you want to call it. And couple that with the fact that we just don't have the buying pressure or the volume in open interest, whatever you want to call it, whatever indicator you use, to support the prices here, especially heading into the FOMC in 14 hours. If we get, a huge shock and people start to panic sell, there's just not enough volume to buy out that dip. So, we could still potentially see 6,040 or 6,200 on a retest. And obviously, if we do go that low, a fast snapback would be ideal. Having a look at Nvidia, you can see the weekly BX trender is making lower lows. So I've obviously followed my strategy and sold out on Nvidia right here on the close of this week here, $173. Considering you would have gotten in around $110, that's over 50% profit. You should be very happy with yourself. But now, to look for a re-entry, I would either be looking for a retest of old highs around $153, potentially a retest of market bias around $158. So, putting some buy orders in that maybe 148 to 159 range, or we're looking for a signal on the BX trender, a weekly higher low. So obviously, being a weekly time frame, these signals may take many weeks to play out. So we're just going to have to sit back and wait. NASDAQ, pretty much the exact same analysis as the S&P 500, except we have actually seen both light red and dark red closes in the last few weeks, which is not ideal, especially since we have pushed into new all-time highs now. And, everyone was expecting more of a pullback. So one of two things. One, the market's going to keep grinding up and people are going to FOMO it at higher prices. Or two, we're going to end up with a fake out and we are still going to retest previous highs around, 22,500, which would also line up with the market bias. Now, you got to remember, the NASDAQ is obviously comprised of all the big tech stocks. And if the tech stocks are closing lower lows, then on the BX trender, the NASDAQ is probably going to do very similar. Microsoft, pretty much the same as Nvidia. I'll be looking to re-enter a position, potentially on a retest of the old highs, like 460, 470, or market bias, like 480, 485. Or if I get a weekly higher low on the BX trender. Until then, we had a really nice ride from $391. Hopefully you took some profits on this, huge gap up, which just looked like an exhaustion move at the time. I was saying that to everyone in the TIA Premium Discord. I'm selling Microsoft, and this is one of the signals that I talk about. When the market chops sideways and you have only a very select handful of stocks or cryptos just going parabolic, that usually means a local top or a significant top that won't be broken for weeks or even months is probably at play. Now, if you waited for the actual sell signal, $507, you've still made, 35-40% profit. So congratulations if you've taken that trade. Tesla, again, I was calling long ever since we got the weekly close of... I can't even speak today. I've been talking too much. Ever since we closed higher high on the weekly BX trender, ignoring this one fake out where, you know, you would have bled like what? Like 17 bucks, you know, 23 bucks per share. And if you'd gotten back in when the market reversed, which is something Michael always talks about to us premium members and on YouTube as well sometimes, that, you know, sometimes, you know, you sell out and you have to get back in at a slightly higher price because the market has done its thing and showed you your old analysis was not right. So you've just got to be flexible. And when you start being wed to your analysis, you start to lose money. Now, we've had a really nice ride from $330 to $420, coming right up to this institutional sell zone. Obviously, we met some resistance on last week's close at the $400 psychological level, but obviously we had the Elon news that pushed it a bit higher. So maybe, you know, we squeeze a little bit higher right now, but I think we will probably need to take a breather, either, you know, maybe like a 1 week correction that comes down, you know, like 10%, or maybe we just chop sideways for a couple of weeks. But either way, you know, if you want to take some profits, go right ahead. You've made, you know, nearly 30%. Or if you'd been getting in through here, you know, when we first saw lower lows, you would have been up like, higher lows, you would have been up like over 60%, 70%. My maths is so out. It's been such a long day. But with the exception of that one expense trade / loss, you know, Michael likes to call them expenses. I like to not sugarcoat things. A loss is a loss. Yeah, Tesla has been pretty good. Google, Alphabet, it's been going straight up. Obviously, I've been taking profits from like 230 onwards just because, you know, that bar there looked very abnormal. And usually when you start seeing vertical moves like you get on like Microsoft, you usually see like a pullback / a retest of the old highs, which, you know, depending on what happens with the next few weeks and the FOMC in 14 hours, we could, you know, retest all the way back to $210, or even, you know, a quick wick to 193, and we would still be in bullish market structure. Now, you know, your BX Trender weekly entry was here at $167, so if you got in May, you're up over 50%, so congratulations. Take some profits if you want, you know, keep holding if you want, but there's no reason to be selling or going short. Like, yeah, over to Apple, pretty much the same story. You know, we had our long signal over at $200, we're up 20%. Obviously, we had a bit of a sell the news event with the iPhone 17, disappointing investors, me, my friends alike. Still no 8K video recording. What are you doing, Apple? But that's pretty much not much to talk about. Like, maybe we come down for a retest, like a triple bottom, slightly higher low of $230, but I think we are potentially setting up for a bit of a bullish pennant here, like a smaller bullish pennant, whilst this one here that we just broke out of is obviously a huge bullish pennant. So I guess Apple is still a hold. Meta, you can see we have actually started this week, obviously it's not closed yet, with higher lows on the weekly BX Trender after 3 weeks of lower lows. So if we can have a strong close this week, we could potentially be setting up for, you know, another big leg up. You can see here, you know, when we had a couple of weeks red, and then as soon as the BX Trender flips green, you know, if it's a really big abnormal bar, it might take a few weeks to consolidate, but then you get this huge, you know, 20% push up. So, you know, something like that could happen again. So if this week closes nicely, I will get into Meta. I'm not in at the moment. If you got in on, you know, this retest of old highs around 720, congratulations, you're better than me. Amazon, this is not one I've been personally trading, just because I don't really like how choppy it is compared to, you know, the cleaner moves on like Meta, Google, you know, Tesla, Microsoft. There's obviously a bunch of fundamental reasons behind it, and you can see we had our fake out week to the downside, and potentially, you know, this week could potentially be the start of a new uptrend. You know, when you see a fake out and the next week closes higher high on the BX Trender, You can see over here, it usually leads to, you know, $154, and we would have ridden that all the way up to 190 with a pullback to 165. So yeah, we could potentially see like a 20-ish% move from here before we see a pullback to retest the market bias again. So if everything goes well for Amazon, you know, we could be looking at 260, 270. Netflix, again, you know, it's been one of our early runners this cycle. I remember talking about it here, how it looked like it was very overextended. I can't remember if I talked about that on YouTube or if that was just in Discord, but Netflix has been, you know, we've had two fake out signals of higher lows before we've closed lower lows on the BX trender. But we are back at market bias. So, you know, we're not like way overextended. You know, you're not paying a big premium. So if you wanted to get in for whatever reason, you believe in the fundamentals or whatever, now's not a terrible time to get in, especially because it looks like we've somewhat filled in this big, you know, rally up. We've filled this gap a little bit. But if we do have, you know, another sell-off, I'd potentially be looking at the old tops here at 1060 or the underside of the market bias around 1126. MicroStrategy has been a bit tragic. It is obviously, I remember talking about it here on YouTube and in Discord, how it's rejected from 50% extensions as well as 50% retracements. And it's just not looking great. It's slipped below market bias, 50-week triangular moving average, and look at all those weeks of lower lows on the weekly BX trender. That being said, it looks like we are forming a bit of a new base, and it is still a higher low from, you know, August tariff trade, and then the the yen carry trade, and then the Trump tariffs. So, you know, if we do start getting some signs of strength, like we start to break on top of the market bias, we start seeing higher lows on the weekly BX trender, or if you come down to the daily time frame, which I rarely ever do for stocks, then, you know, there might potentially be a trade into, you know, a lower high, which Jason is absolutely believing based on his analysis of MicroStrategy from the past cycle. So if you watch his videos, definitely keep that in mind. Coinbase is one that I just entered a position myself, and you can clearly see last week we closed higher low on the weekly BX trender, and we have managed to slip a tiny bit higher this week, as well as bouncing right off the 50% level, consolidating, as well as holding market bias. So where do I think this rally could go to? Well, we'll run another fib retracement from the high to this correction low, and you can see the 50% level comes in at $368 almost, and we've got an institutional sell level of around $412 to $418, keeping in mind your $400 psychological level as well. So I would probably start scaling out from around, you know, $365 or so, just to lock in a bit of profits. But Coinbase, you know, it's a crypto exchange, obviously, and if Bitcoin is going to, you know, make a higher high, it does run the risk of making a lower high, just like MicroStrategy. It doesn't seem to follow, you know, the actual exchange tokens like BNB, CRO, OKB that I covered in an earlier video. So even if we do make a lower high, I would keep So if we do make a lower high, I would keep my eyes on the $400 to $420 level. Now, you know, who knows? This cycle, Coinbase might actually end up performing like an exchange token, and we might end up making a higher high. Now, unfortunately, I don't have any more cycles to backtest, which would be really useful. But as always, follow your strategy, know your invalidation signals. So if this week closes a lower low, I will just have to take the loss and get out. Now, AMD is another very interesting stock. If you go onto YouTube and watch Peter DiCarlo's video over at Trader Helping Traders, he predicts that AMD will actually more than double from where we are now, I believe. And you can see we have pulled back almost to market bias in the 50% level. So after rejecting from the institutional sell level, So we could actually be trading at, fair value. So if you get in now and it pulls back, 10%, but a year later it's up 100%, maybe you won't feel so bad after all. But for me personally, I will still be waiting for the BX trender to close higher lows on AMD, just because I've gotten burnt a few times trying to catch the falling knife through here, and I would really like it to pull back a little bit more. But if it doesn't and we just start rocketing up and I get the BX trender signal to go long, then I will start opening up more positions. And if I do, I will obviously let everyone know in the Discord or make a YouTube video if I could be bothered. Now, Celsius is one that I exited way too early. I just keep this chart here for mental torture on how much profit I missed out on. BMN is one of the ASX shares on the Australian market that I've been watching a little bit. It's literally moving like an altcoin with all these weekly swings. American Airlines was a trade that was called over on the Traders Helping Traders weekly newsletter, and you can see we have punched the take profit target. So, you don't have to pay, $1,500 US or $2,000 US for these premium memberships and trading groups. Now, obviously, if you're trying to be a full-time trader or an investor like me, it's going to level up your learning. It'll level up how fast you learn everything and how fast you become profitable, as well as potentially make you more profitable. Just because, there's a lot more paid courses than there are free courses, and, so on, so on. But even the free newsletters, there's often, such great trades. TIA Crypto does newsletters, Traders Helping Traders does newsletters. And this trade right here, you've made to the take profit target, it would have been just under 50%. And if you managed to sell the wick, you probably didn't. Anyways, over here, CleanSpark, another thing that I called out in the Discord, TIA Premium Discord, we had 7 weeks down into this trend line here, and I can't remember if I talked about this on a YouTube video on the 2nd of September, maybe not, but we have seen a very nice move out of that low, and we look like we have closed last week with a higher low, and this week is starting to turn green. So, my theory of rallying into this trend line, which I very much think I talked about on YouTube, but I'm not going to go check right now, or even the 50% level, could potentially play out. Palantir Technologies is another one that I am tracking. Now, I know that Peter DiCarlo said in his, YouTube video that he wants it to come, all the way back down to, where's market bias? Potentially like the $96 level. And obviously that's fine for him because, he called it on YouTube, X, the THT community way back like 30 something dollars. So when you've had that good of a run, there's no reason to be, buying back every single dip and potentially risking giving back heaps of your profit. But for people who are only just looking to get in now, a pullback to market bias, as we saw here with the tariff correction, is not a bad place to enter, around the $127 to $143 level, which we pretty much tapped on a wick a few weeks back, and we have pushed very strongly away from there. So Palantir is potentially one of those stocks where you buy high and sell higher because you've missed a chance to buy low and sell high. Him and Hers is another stock that was called over in Traders Helping Traders, and I think we caught a massive move from like $30 to $70. It has been closing higher lows on the weekly BX trender, and you can see that price is starting to move up. Now it does, if I can grab the correct trend line, it does look like we are rejecting off that trend line. So if I extend both these trend lines, you can see, should we manage to break on top of this trend line, we could see potentially, a 10, 15, 20% move up. But it does look like, a bit of an interesting one. And, you know, especially if you've already had a 100, 150, 200% profit on this, I don't see a reason to be gambling around with a setup like this when you have a much cleaner setup on something like, you know, Coinbase. What else do we have? Like Tesla, etc., etc. You know, like Tesla has already ran. Obviously, him and hers has ran. So potentially getting in on something before it runs, like Coinbase, or keeping your eyes open for something like Netflix and AMD to give you buy signals would be my preference. But obviously, you do you. Yeah, sorry. Off topic, but it's not really off topic. The Traders Helping Traders weekly newsletter. Peter splits stocks into sections where there's like discounted range, prime buying territory. So something like Coinbase, where you can enter a position now before it starts to rally, or something, you know, like Tesla for around like the $330 range, where it's, you know, it's rallied a bit, but it looks like it's consolidating for another move up. And he'll have a premium buying category where it's like, you know, if you're already in, take a bit of profit if you want, or just keep holding, because, you know, you wouldn't really want to be entering positions when it's already rallied, consolidated, and then rallied again. But yeah, that's pretty much all the analysis I have for you guys today. Thank you all for watching, and please like, comment, and subscribe, and enjoy the volatility in 13.5 hours when it happens.